Hey everybody, welcome back to our ThinkScript class. Looking forward to a discussion looking at ThinkScript and ways to trade that ThinkScript. We don't want to ever forget that part, folks. My name is Mike Fairborn, though. Great to be back with you, folks. Joining the chat by a good friend and colleague of mine, Mr. Kevin Horner. Good to have Kevin on board with us, folks. Hey, I want to take a look too. We'll look at some concepts. Had a couple of topic requests to look at as well that we talked about this week. Maybe a couple of cool ideas on how to scan for a couple of the indicators we looked at this week to maybe just kind of scan the entire market and pull out some potential opportunities where there might be strength in the market. So those were the topic requests. But today I wanted to take a look at a script that Robert had provided a while back, which is really fascinating. It's a way to see potential intrinsic value of a company just like this using ThinkScript tools. I want to tie that in together with an earnings beat percentage that I built and dive into that a little bit as well. So plenty to look at here today, and it's always interesting to see where valuations are across the market in terms of using some of these valuation techniques that are out there that have been historically used by some of the greats. Today it will be, really the godfather of valuation analysis. Ben Graham is the one that Robert had built. So really looking forward to diving into that and showing you guys that. So with that, though, let's start off with some disclosures to get going. The information here is for general information purposes only and should not be considered an individualized recommendation. Okay, paper money software application is for educational purposes only as well. Now, backtesting results presented are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results. Markets are always changing, right? Past performance of any security strategy does not guarantee future results or success. A quick glance at some of the futures disclosures there. Futures options trading involves substantial risk, not suitable for all investors. And finally, oh, that's it. That's right. We got it all in one slide here. So we are good, folks. We're ready to go. Let's just start off with the sharing. And welcome to you guys here. Great to have you on board. So Robert, I'd mentioned to Robert a while back that I was going to discuss this. I thought it was just great timing. There's a lot of different indications and valuations within the market. We'll hit that momentarily. First, let's look at the market. Let's do a couple of topic requests that are out there, and we'll go from there. Here it is, folks, the S&P 500. How are we doing? Well, we opened up a little bit higher today on some pretty interesting data. Did get a chance to post that out just to my X handle. Sometimes if you see a big gap in the market, there's 500 companies in the S&P 500, and to get all of them to gap like that off of yesterday's close right here, that kind of a range. Let me just go ahead and highlight this on the chart. But that's a big move. When you look at a bar like this, there have been some studies out there that say, if you open in the top 90% and you trade in that range and you close in the bottom 90%, there, some studies will suggest, and I'm not stating any specific studies, but researchers have looked at this and they say, hey, go ahead and say, they say, well, on average, there's a 90% chance that you'll trade lower the next day. A sign that didn't happen? Well, of course, we gapped higher, but oftentimes it can be the economics behind the scene there. Behind the scenes, and that can throw things off a little bit. I'll just throw this out real quick. Be sure and follow Kevin and I on X, Kevin Horner CS. Got some great stuff there. I'm Mike Fairborn CS, and I just posted this here. The CPI numbers came out. CPI versus expectations, which is what a lot of times the markets will look at. They look at those expectations, 2.7 versus 3.1. The core was lower. Of course, driving through parts of southern Utah yesterday, I did say, a lot of gas stations at I should say $2.50, 2.50, right in that range. And so prices are lower in that regard. I did note here too, just from Kathy Jones here, who works at Schwab, that she said, hey, there's no month-over-month comparison. And one of the reasons for that is, folks, the government was shut down. I don't know what the data looks like there, but some of the numbers, maybe in the core CPI, well, I guess other areas too, but anyhow, yeah, it beat expectations, and that is what can give you the lift in the market like that, because that was a pretty big dip. Folks, that's a decline. I mean, that's a big bar. right there, and we did gap up, and it's kind of like that would also be known as a Harami pattern too. Doesn't mean we're going to go higher, but if you trade inside the day, the day's not done, but if this body rests inside the prior day body, a lot of times candlesticks traders, they'll say, hey, that can mean, well, potential reversal. We'll see. We'll see. It's getting a little bit late in the year for a year-end rally, but maybe it could bump up to those same areas, okay? So just generally speaking, sometimes we look at what kind of think scripts we're going to employ based upon market activity. Now, in my swing trade class earlier this week, we talked about, and heck, I'll just use Apple as an example here, throwing this out and seeing what Apple's up to. Apple's still dipping. Actually, I'm going to use the one we actually did a scan for here. But there was you can see we have a sample example trade on this one, Akamai. But basically what we were looking at too, amongst other things, price patterns, you name it. But one of the things we were talking about is employing a moving average that's part of the ThinkScript, the Thinkorswim platform, and it's got its own indicator right there, the whole moving average. I'm just using that default right there. Let me just quickly go down here, and Kevin's got some issues with the colors. I was going to use green and red, but I like him to see it as well. And so hopefully this will work better for you, Kevin. I can actually change that to a yellow or something like that, maybe to pick up on easier or something like that. I don't know what I'm doing. Not a red though. Red and greens are tough to pick up on. Here we go. Let's pull it up right now, and I'll just show you what that hole looks like. It's a way to take out the potential lag of a moving average, okay? And what it does is it uses half of an additional range. It cuts it in half. There's a calculation behind it. We can go into detail, but I did that actually in my swing trading class. But there were a number of requests on this to get a scan in place. And folks, I'm just going to show you how easy it is. One of the issues that people were trying to do with the scan in that class is they were in the swing trade classes. They were saying, Mike, we got to know, and let's do a calculation when the colors change here, right? And that is a much more difficult way necessarily. It could be a difficult way to look at it. Instead, look what's changing the colors. In this case, what we're looking for is, prices really bouncing off that level, going higher and doing a few different things. So there are a couple of different ways to maybe scan for this. But folks, the key point I wanted to highlight over here as we look at this is, the change within that indicator here and how we can, get it set up in place. Now, I'm going to come back to this in just a second. That was the move to the upside. We're looking for the move to the breakout. And effectively, what a trader might do is they might say, well, Mike, when this is moving, when this is breaking higher right here, okay, and prices are going up, we're really looking for an extension of the move to the upside. And maybe you can see my T1 target up here for a possible flag pattern target using this price to this price. That's our extension to the upside. This could be a potential entry. It's a quicker moving average, right, as you can see, as opposed to a 20-day. I'm going to pull this up right now. It's one we've looked at in the past, but here, okay, the default's 9 here. Let's go to 20, and then you'll see this right now. All right, so there's the 20. You can see that prices will maybe breaking above the 20 here. You might be getting, though, a signal earlier. This is kind of comparable, but, you've got one versus the other. Let me change that color. You just can't even see it, comparatively speaking. So I'm just going to change this to a yellow line. You'll see it just stay steady yellow. There you go. Well, anyways, there you have it. Those are some of the differences. You can see that it is a little bit quicker. You can see that there is a change in that whole moving average. But what some traders will do is they'll look for prices to simply just start to break above the hole right there. Now, there might be a further indication in the change of the color right here. And by the way, that color is occurring also when you're getting above that 20-period moving average right there. But it's earlier. How do we get maybe an earlier indication of that? We're simply just looking at prices closing above the whole moving average. Such a simple one to do, just like we'd done previously. But this was the actual topic request, so I just wanted to hit it right now. If you wanted to, kind of set this, you know what, we'll scan for everything here. Well, yeah, let's just do that. S&P, instead of the S&P 500, what I'll do is I'll scoot on down and I will use something like a NASDAQ 100 here. And it's just a simple, this is one that everybody can do if we're going to be doing this just in the condition. I mean, regardless of where you're at in your learning of ThinkScript, folks, just the condition wizard is so easy right there. Let me show you how I did that again. I'm in the scan tab up top, sub tab, stock hacker. Got to be there. You come over here to your add filter, and then within the add filter, what we can do is we can click, drop down, and just go to the study filter. That's where I'm at right now. In the study, we've got to click on the pencil right here, or pen, whatever it is, drawing tool. All right, you go over here, and that's the default. We delete that, and all we're simply going to do is stay in our condition wizard, just trying to make this as basic as possible. And we can actually look at the code afterwards as well. But price action, the closing price, even looking at prices today, where are they closing at this very second? So it would include those. Crosses above, just use the whole moving average. This is going to be your earlier indication, potential change, okay? Scoot on down here, and you've got your 20. That's your same default. Within, I'm just going to say within, let's just do one day. Prices are going above there as of today, right now. Really early indication. We could do 2. We could look back 3 bars. That's how simple it is. Close, crosses above. Just name it. If you want to look at it in ThinkScript format, close, crosses above, whole moving average. That's literally all you need to run this scan. And this is as of today. We've got Tesla. We've got Dash. What else do we have in here? Microsoft, Amazon, okay? A little bit of a broad range movement. You'd expect that too with the market. Let me pull this. Well, let's keep it on. That's okay. I'm going to go back over here. Let me just change this color to a purple or something. We got so many yellows in here. I'm going to really darken this up. We'll just go to a purple or that. There you go. Okay. So Microsoft, MSFT. Here we are. Okay, notice we're just getting above. Now, it's true that it is above the 20-period moving average as well, which is fascinating because it's kind of showing us a little bit of a trend line coming down through there as well, getting close to it. But you can see just early, super early indications. There's still a difference. You're getting a little bit, and traders will look for these advantages. Now, you saw on the last chart, Akamai, big difference between the simple moving average and the whole, trying to reduce that lag time. But here you go, right? So let's do this. Let's go over here. We also saw Amazon in here as well. Could these be potentially early signs? We're not getting this on the 20 period right now, the simple moving average. But right here, we're just getting above that whole moving average. And again, potential early indications of a change in trend right there. Okay, more details on it. There's more going on behind the scenes. You can take a look at that swing trade class if that's of interest to you, but it is quicker. It's part of our platform, and it's right there at your fingertips, but really easy to do. And some people will just ask me to post this, so let me just post it. It's really easy, really straightforward, but heck, I'll do it anyways. Let's just, in terms of, in case you want just to have it. But if I go up here, I could just share it. It's just so simple, you guys, but it's a good way to learn the ThinkScript as well. Because I know many of you, just from the feedback I get, are saying this for the first time. And by the way, scripts aren't guaranteed for timeliness or accuracy, but they do follow along. As long as we got good data going through, that's what, we're relying on, or these ThinkScripts to work. All right, so here it is, and it's just a simple scan here. But that's how it's done. Because many of you in that class, I think we're going to come and take a look at this. Want to make sure we had it in place. There you go. All right. Now, the other question I get a lot is, Mike, you just focused in on the upside. Well, what about the downside? There could be a downside, and that's right. When do you get out as an idea? What are some things that traders will use to get out of the trade? Well, one of the things I was looking at here, and I'm going to start tapping into some of these cool scripts that actually Robert had written a while back that I think are so valuable for some of the basic trading mechanisms. And I did get permission from him a while back too to share, unless he's changed his mind. But no, he's very open with this stuff. But let's do this. Let's go ahead and put this in. This is right over here. And Robert is here with us today. And so if we do, if there's anything else Robert would like to say, I'll, feel free, Robert, to let us know in the chat. But here it is. This is the script, and it's basically looking at that in an ATR range, which is so nice because it paints it right there on the chart. Let's add it in right here. And we're going to go over here, and we're going to go into the ATR, and you can see over here, we have some inputs that we can take a look at. Show ATR. Yes or no? We want to see it on the chart. Of course, you could take it off if you want to. Do we want to have a bubble? Do we want to have a line to show it there? Okay, so do we have the label, the line on the chart? Fantastic. As well as the show bubble? Yeah. What is that number? What is the ATR multiple? Let's hit a 1 right now. I'm going to do a width of, let's see, maybe a 4. Am I going to be too big? There you go. No, I think that's perfect. Okay, so this is what we've got in terms of our ATR. By the way, that's the upside width. I'm sorry. So we could look at a couple. These are the lines up or down. I'll just narrow this one down to a 2. That's fine. Upper and lower, we'll go 2 and 2. There you go. So now you have a visual of the ATR on the chart. You have an explanation of what's going on up here as well. But this is a 1 ATR move. What is the ATR? Stands for the average true range. Let's add that indicator in as well, because this is a method for exiting, for some traders as well, taking targets on a potential move. So there you got it right there. And notice over here, our ATR is a 1 ATR right there. That's a 1 ATR. In other words, right there, that about 5, that's what these are based upon, to the upside and to the downside. In fact, you can see it right there. In the label, it's a 5 ATR. I think the beauty of this is you can visually see it and say, does that ATR make sense to me in relationship to where the stock has been trading? Okay. Okay. And I know many of you are very high level on the tech end, so sometimes I don't dive into the details of the ATR. But just a recap of what that ATR is, it's an average true range. I'm using the default here. That is the Wilder default, the 14-period Wilder. And what is that? Folks, we're just going back 14 days, and we're using what's referred to as the TR, the true range of a stock. Now, the true range of a stock is just the range on the day. If I can just draw a candle in here, you got a high and a low. The range, the true range is this right here. That high, that low. That's the range of the day. And we actually have that range listed right up top here too. Do you see it? The range on Amazon today is 4.8. 4.81. 4.81 is our range. That's the high and the low. Now, if we put an A in front of this, we're just averaging it out. And why that ATR made so much sense to me from literally eons ago looking at this stuff. Wells Wilder had the ATR and the RSI. He talked about that in 1978. And a few key discussions that he had on it is he was looking at kind of like, hey, ways to engineer the market. And by the way, they're fascinating because this is what I think made the most sense to me. You have an ATR, so you have the range. Now, what some traders will do is they'll say, well, what if the stock trades that full range below where I think it's going to go higher? Let me just use that one last stock as an example. We were taking a look at AKAM. Is one we could be looking at right there. Where is that ATR at? It's right here. So that's a more flexible, that's a bigger potential exit point right there from where we're at right here. So you can see that up top here, some traders will try to exit when prices go below a moving average. In this case, it's that quicker moving average, it's the whole moving average. Some might say, well, I want to give it a little bit more flexibility. And that can make a lot of sense to them too. What is the range where we're at, and what's the difference in terms of prices, dipping to that potential, to that level? Okay, and this is the area that we're focused in on here as we look at an ATR. So that can be interesting. I love how it colors it. It puts it in place. Sometimes traders will use a 2 ATR. Let's pull it up right now. ATR 2. Why would a 2 make sense? Let me tell you guys why a 2 would make sense to some traders. Think in terms, and look where this one lines up, by the way, just below that longer term level right there. Wow, that's a ways down, just below this low. Why could this make sense? Well, for a trader, if you have an ATR and the price is moving, let's just do this. We'll just do it a little trend. So prices are coming, they're in a range, and we know what that range is. But if it drops 2 times its normal range, its normal ATR, isn't it then showing us maybe some additional signs that it might not be doing what we thought it was going to do? It's double outside of its normal trading range. Okay. And that's kind of the logic that some traders will use as they look at this. One other thing I'd say too is that it is volatility adjusted. If we're using this as a potential exit point, look how when the ranges get bigger, it adjusts to the volatility of the stock going higher, which might make a lot more sense. Notice the ATR over here jumped up quite a bit. So those are some considerations right there. Okay, let me just see here what we've got. All right, let's go down. I'm going to zoom down here and take a peek. Yes, I'm going to share it right now. Let's do that. Of course. So let's share that specifically right here. Okay, once again, not guaranteed for timeliness or accuracy. There are some details listed in here. I love the inputs. I think they're fantastic. Let's go ahead and just click OK, and I'll send these through right now. Wait. Yeah. Share. Boom. There we go. Okay. And OK again, and I'll send this down into the box. And so this is the ATR visual. Absolutely. And thank you to Mr. Robert Boucher for that. I love to see these on here. Yes. Can you change it to average? Oh, it says, hey, can you change it to a percent instead of a price? Oh, that gets me thinking a little bit. Yeah, I mean, sure. I mean, there could be some approaches to doing that. Looking at it as a percentage move as opposed to a absolute value, right? We're looking at absolute value ranges here. That's interesting. Okay. Thank you. An interesting topic on that. An interesting point there. Okay. Well, folks, we've looked at that, and I wanted to hit a couple of those topic requests and just kind of build some of these basics in here for us. We don't want to necessarily throw those away. I'm going to take them off the chart here for just a second, though, and highlight a few details. All right. So next thing is the next script, which was, I thought, a genius approach to giving us a general idea. Hey, where might the potential value of a company lie, using what Benjamin Graham had talked about years ago, right? And I want to walk through this a little bit with you, and I'm just going to type in the intrinsic Ben Graham that I got, which is just way cool. There's a lot of different aspects to it. Let's put it up on the chart, and then we'll walk through it, okay? I want to show this to you. And I'm going to go ahead and click OK, and I didn't do that right. Sorry. In fact, I'm going to do something like watch this, MSFT. We can look at the other ones as well, but let's click on it. Let's get into it. And actually, there's an awesome explanation right here too. Let's put it on the chart. I want to highlight it though real quick first. Here are some of the defaults in place. Now, I'm going to change this right now. I was looking, this is actually the corporate bond rate. Let me just put this in for now. It's about 5.2. I'll use 5.1. It's right in that range for corporate bonds for a AAA rated bond. We'll talk about this in more detail, and I'll show you how this works. And this is all it simply is. Now, could we get like a line in here to show us where that is as well? Yes, we could. I mean, I think that's doable. I believe we could get like an add label line in here and show us where it's at. But right now, you can see that, 520, sorry, I dipped down a little bit. Around 520 is the Ben Graham value. So in this case, as we look at this stock right now, it is, according to the way that Ben Graham has pieced his formula together, it is undervalued by 7%. Now, does that mean it's a price target? No, it's not a price target. That's an expected valuation level. Now, what I love to do with that is I like to take a level like this and say, what else am I seeing on the chart? Is there anything else here that's of significance? Maybe it's an interesting Fibonacci level. Maybe prices do whatever it might be. It's a beautiful flag pattern setup. Where does the volume profile fit? Because volume profile has also been known to see where a lot of trades are, and where you're getting a lot of trading volume, sometimes that's where the big institutions are buying too. It's a great layover for it as well. Okay, let's break it down right now. I'm going to go right off of what was mentioned here for us as we go into that. Let me share it too. Well, let's just read this real quick. So let's go through it in detail. Some of these need to be adjusted, okay? But this is what's going on. So the Benjamin Graham updated intrinsic value formula, as Robert has pieced this together, using just some cool tools here. And we'll look at the code here in a moment too as well. But V, that is the intrinsic valuation of the company. So we're looking at V up top here. That's V. I'm not going to be able to click. That's okay. I was going to point to it. No big deal. The valuation equals the earnings per share, the company's last EPS. Now, why is that so important? Why would that be so critical? Well, what a company's growth rate, what their earnings are right now, and what that earnings have been changing over a period of time can really help us understand what is that valuation doing. EPS essential. It can make a difference. It does make a difference. Look at it. It's right there in the formula. It can make a significant difference as to the valuation of the company. Now, what he did for basically a no growth company, as proposed by Graham, 8.5%. That is basically a PE ratio. They're just saying the company doesn't have any growth. So they're just putting out a number out there, say this is kind of the value of it. And then we have G. Okay, and what we're doing here, though, is there is a 2 over here plus 2 times the growth rate. We're also multiplying that. Again, growth rate, yeah, important. Growth rate, company's long-term growth rate, 5 years. We can pull this stuff from Thinkorswim. We don't have a huge selection of fundamental data to pull for ThinkScript, but this one works. You've got over here in terms of what we can pull for this formula. It works to help us to create the formula. It is, again, though, a projection of the company's value. It's not a price target, but yeah, just want to make sure I get that point across. Now, this 4.4, that was the average yield of a high-grade corporate bonds, and then you've got the current yield, which is pulled on the corporate bonds over here. So I moved this up. This was his original number, but of course we want to vary that with whatever the rate is right now, and I've changed that. Okay. And yeah, so 5.2 is the AAA bond rate. The growth multiplier, that's just part of the formula. We've got the risk-free rate of return. They're using the 10Y. You can also use the 30. And look at this. There are some selections you can use, which is great. Got a label color in there, and there you go. Okay, so now you have a general sense of what's going on behind the scenes in terms of the valuation. Okay, let's get this out. Yeah, so Jerry, that was the ATR. Okay, you got the ATR visual on the chart, and I'm going to get this one out right now as well. We'll look at the code, but I want to get you guys loading this up and making sure that you guys have it on and looking on it. But what a fantastic reference, honestly, to have, just to have any fundamental reference is a totally different dimension, what we're talking about. So when I say fantastic, I'm saying it's great to have another dimension, right? Again, we've talked about what this script does and how it was used, but here we go. Let's do this. I'm going to come over here and pull up Ben Graham value intrinsic value. Okay. And again, not guaranteed for timeliness or accuracy. And there you go. Tatiana, it just came through right there. Yeah, it's great. So I appreciate Robert going through the time of building this. It's really fascinating. Now, I did put in a solid effort here to try to get it on a scan where we can scan. The problem is there are label issues. There are issues when it tries to pull the data. I tried to put it in a column format. I did everything I could. Maybe I'm doing something wrong, but I tried to get it because I wanted to actually do this. Because one thing that Ben Graham did discuss in his book, or just reference, I'll just say in his reference, not a specific book, but he just talked about it. And generally speaking, he said his starting point is at least a company that is undervalued by 20%. So the way that this looks over here, it would be minus 20%. This is 7. I wanted to have it show up in columns, etc., but it will only pull up one at a time. And I believe that Robert, who's not said anything in the chat yet, but I believe that it pulls it individually as much as as close as I could tell, just looking at the ThinkScript data. So anyways, I was in the Learning Center though. I spent some time in the Learning Center trying to get this working, and yeah, anyhow, 20% might be a cutoff, but at least it gives you a reference point where that valuation comes in. Now, let's pull it up right now and look at it. And then what I want to do after this is I want to trade some ThinkScripts. And this is going to be part of going forward with everything we do, using all the scripts that we've talked about. How can we layer them to give us information about, where stock, some traders might say, hey, this could be an interesting point. Buy, sell, whatever the case might be. And I'm going to add in additional script that I've got for you guys, but that's in just 1 second here. But up top here, a couple of quick notes how this is done as you come over here. So first of all, yeah, you do have the ratings in, the labels and the notes, the inputs specifically in here that are built. What I wanted to highlight that I loved in here, just taking a look at it, is you can see you're referencing over a 1-year time frame. You got the earnings per share. Just scoot on down, you can get everything you need in terms of get earnings growth. And you can see what it's doing in terms of earnings per share. Last year, you've got a 5-year. You've got the calculation right here to define that growth. And that is the calculation of that growth value, which is a key portion of what we're looking at here. All right. Now, into the trading side of ThinkScript and using some of the ThinkScript codes to help us in that regard. I don't know if I'd shown you guys, in fact, I don't think so. Let's go over here into our Paper Money account. Actually, I'm just going to highlight as we get into this. Oh, yeah, let's go to the quotes. And I did put in this earnings beat. This earnings beats, I'll share this with you guys. What I like about it, in this sense, I've just made one adjustment to it. It was either an earnings beat, yes or no. Instead, what I did is I took it a step further and said, what is the percentage of earnings beats? So what we're looking at here is this right here. Microsoft, if I come right down here and look at this, these guys did beat. And as you can see right there in that box that opened up down below, earnings, the estimated number, that's where the beat comes in, 3.6 and change to 4.13. It beat by that amount. Now, what we're referring to here is Thinkorswim uses what's referred to as non-GAAP earnings, okay? So this is what's oftentimes used based on that street number estimate to an expectation in the future. Okay, that's what they're talking about. That's the beat. And that's what we're looking at. And this over here will give you now that percentage of where we're at. And let me just right click and show you some of the details. So I'm right clicking, I'm going to edit formula. I'll pull this guy up right now so you can see it. And, I did title it earnings beats over the past 20 days. But what you can do is just alter it to whatever you want. This is the past 2 weeks. So I want to just get it a little bit of a tighter time frame. But whatever the case is, there it is. All right. It was really kind of adapted by me. I was using other people's code to get it here, but I think the percentages are interesting. The reason why I like this too is because, we can just click on the column and organize it. You've got those that missed. These all missed. This is the S&P 500 we're in. So we're scanning in the S&P, companies that beat, and those that missed. And the majority of them beat. There is Synopsys right there. They beat by 100. Let's verify this too. SNPS. Okay. SNPS. There was their number right there. 1.44 to 2.9. Yeah. That is just like it said, at like a 101% beat. Now, now you guys see what I'm doing now? What was a huge, huge, huge portion of the Benny Graham formula? Earnings per share and the earnings per share growth. That's what can help us get higher valuations. I mean, it can, based upon this formula. And I would say, generally speaking, institutions and analysts, if companies keep beating estimates, well, they might be gaining more retained earnings, and overall value of the company could be increasing over time. Okay? So this was a miss. This was a hit, on the plus side. It was the biggest, I'm just looking, we were going from top to bottom, just as an example here. But where is the intrinsic value at? Well, I think our next phase here is maybe doing a line so we can see that line. I'm just trying to put under 500, but maybe it's somewhere in here. I'm just using that Benny Graham. Right now, you can see the difference of where we're at. Okay. Yes, I will share that right now. Let's get it going. Again, not guaranteed for timeliness or accuracy. You guys are getting that down probably pretty good. But that's just the way it goes. We'll keep mentioning that, just to be sure. So there we go. Okay, we'll share this right now into the chat. And by the way, everybody, so this is earnings. So this is not just, so it's EPS beat as a percent. More detailed information for us. There you go. So what we can do with that, by the way, everybody that is viewing this off the recording, that's seeing this for the first time, and you want to use this, you want to have this on your Thinkorswim platform, just do this. Go to the top, go under Setup, go under, once you take that script, you copy it, and by the way, I'll show you where I have it, but open shared item, paste it right in here, hit preview, and then you can name it. Watch. So you'd name it right there. This is where you might say earnings beat percent or whatever it is. I'd like to name it exactly what it is, so it's easy to find. You click on import and you'll have it. Okay, and then you can go in, right click up top, customize, and then you can find it over here in your list. That's where you get it. Now, you'll also find this script. I'll post all of these under the more section under our YouTube, on our YouTube channel. I'll just show you. Yep, because I do get a lot of follow-ups on these YouTube messages, and I want to make sure you guys have this. This is very important. If you're watching this and you don't know where to grab these, I'm going to show you right where to get them. Here we go. Right here. So this is right off of, I've just pulled up our ThinkScript playlist. You can get that right off of our Trader Talks channel. Love to have you subscribe, folks. If you're getting value from this presentation, smack that like button right over here too. This is that playlist. I'll post it in the chat just so you have it if you like. So ThinkScript, there's a lot of different scripts in here. We did one last week off of the Jesse Livermore higher low. kind of a setup. But if you click on it, for example, just going to pause it real quick, scroot on down under this more right here, you'll find it at the bottom. There, that was the pivots 1, pivots 2. First one was for the chart, second one's for the scan, is how I'll normally do that. And then you had the basic golden cross as well. Okay, just so we're all on the same page, you guys have it. Now, here's kind of the logic to the discussion. I want to wrap up with this as we look at some of the trading aspects. We're looking at a company that beat earnings. Now I'm going to go through and look at some others as well. But now you're saying, okay, it beat earnings and here's a valuation metric. Where do we stand here? Okay, and how does it sit? Oh, the line is the new version I posted. Oh, just seeing Robert says the line is the new version I posted above. Oh, Robert did post it here. Great. Did I miss it? Let's see. Thanks for posting that. If I did you post it into the chat? Into the chat is what I'm assuming you did. Did I miss it? Did it come in way, way early? Okay, I tried to see it. Sorry about that. I don't know. Could you repost that in the chat? If you've got an updated one, I'd be more than happy to do that, Robert. Thank you for that. I think you might have the line. I'm going to go ahead and just check over here and just double check, make sure I didn't miss anything here. Label. Okay, got you different colors. Growth multiplier. Okay. No, didn't see it there. Okay. Hey, I'll keep an eye out for that, though, unless I'm just misunderstanding here. Oh, I couldn't see it as I scanned through. All right. Well, I will, unless you can see it, Kev, with the line. I started thinking about the line right after I had this all set up and ready to go. Okay, let's continue on, guys. Let's hit a few of these just real quick, and we'll take a look and see where we're at now. So earnings beats, what's the value? And why don't we throw the whole moving average on as well? There's Broadcom in there. AVGO is listed. Should be up top. Oh, it's bottom. I flipped it around. Okay, there we go. Still loading. That's what happens. If I go off the screen, I've got to reload it all back up. But there we go. So we've got Oracle. Oracle dipped, and that's a consideration. I've used different columns over here just to see what the percentages have been. Sometimes it's not so much what you get, what you quoted you're going to do on earnings, like necessarily what you just did, but what you're going to do in the future can really move the stock as well. Adobe was in there too. Okay, so let's do Adobe. See where that's at? That's been down for a while here. So there's Adobe. This got, you guys remember that the Turtle Trader up over, it made a 20-day new high. Sometimes some traders will look at those as a potential turning point. Adobe, you can see it right there, 4.3, roughly 4.39 to 5.5. Where is the intrinsic value? Well, it's still just dangling about above this level. So we'll see. Maybe there can be a reversal, but the guidance can be play a key role as well. Let's see, AVGO was one. And let's see where that stands. So these are all, as we're saying them, yeah, maybe some support down through here, the possibility of a bounce. Tying those two in together, if it were to bounce, let's just quickly tap in to our earlier indicator we looked at, and that would be the whole moving average here. Let's go ahead and just set this up a little bit thicker so we can see. There we go. Have we turned the corner yet? So if we said, hey, where is the potential intrinsic value? It's a little high. There's not really, I mean, this is only 6%, but it could still be interesting to take a look at and see, hey, maybe where that lies at. And then, when we see that, are we getting an indication? Are prices beginning to close above that whole moving average? And ultimately, does the whole moving average change colors, and does it start to move? Come back and look at a lot of these. They're very interesting in terms of potential, a little bit quicker, right? Kind of like that zero lag EMA that we talked about in the past, you guys. All right. Hey, Robert, yeah, if you don't mind, just DM me, and then what I could do, I'd be more than happy to throw that out. I can also work on it myself into next week, because I do love how that ATR uh, gave us those lines as well. So you guys, we did talk about, hey, the whole moving average. We talked about a simple scan. We shared that scan. We talked about those ATRs. So when prices might be coming down, or those certain areas, those could be interesting to look at as well. So we brought those points up. We did ultimately tap into finding where potential value might reside. We talked about that in more detail. And then last but not least, we tied it together with some trading techniques from other Think scripts. And so there is a little bit of an overlap in here, you guys, as we go through each of these, but just wanted to highlight that for you. And hey, I'll look forward to future discussions, folks. We are out of time. But thank you so much, Kev, for your help in the chat. Everybody, great to be with you. Looking forward to trading Think script going forward. Take care. See you next time.